Hello, James King here to demonstrate ForexGridMaster version 5.1. We're going to backtest 1 year of historical bank data going from today, March 15th, 2014 back to March 16th, 2013. Alright, we're going to click Start, which initiates the chart and the robot trading. We'll contract price here on the right using the price scale. We'll get rid of the grid so it'll be clear. These yellow comments here is what is printed on the chart by ForexGridMaster to show you the stats of the real-time activity that you see on the chart. I'll expand the grid here. You can see it's already trading. It has cells above the horizontal white line, which is the grid center. It's a fixed grid, so during the run, that grid center remains the same. All right, we're trading bars at the moment. Normally I use candlesticks, but it's easier to see a strategy test, especially when it's running fast, using the bars. Now I'm going to speed things up. We're going to do a whole year of data in this video, and I'm trying to get it done in 20 minutes. So we're going to go fast. And I'm going to explain things as it goes. Now, that white line flash is the end of day, end of day, end of day, end of day. That orange flash was a close run. If you look up here, there's another close run. It's hard to keep up with. We're getting close runs. Alright, so I've got the grid very contracted so that we can concentrate on the comments. Now if you look at the comments, it says run 1 to run 8. So we've had 8 different runs. We're up 8.75%. There's another run. 9 runs, 9.99%. Now the target for each run is 1%. Here you see close run profit percent 1. So we've chosen to target 1% on the basket of trades within the run. Now the way this works is each of those trades you see opening and closing has a take profit right here, TP 15. So each trade, when it reaches 15 pips, will close and take a profit. So there's lots of trades within a run that are closed before the run is ended. They're all positive. In the meantime, there's trades that are open that aren't closed yet that are in the negative. These are buys, price or below. Because they're in the negative, we take the net value of open trades and combine it with the positive value of the closed trades, and when the net value of all of that reaches 1%, we get a close run. And when we get a close run, all trades are closed and the next run starts from scratch. Now it seems the biggest fear out there for grid traders is accumulated negative trades. So by using runs and choosing a relatively small profit target for the run, we're able to eliminate accumulated negative trades fairly quickly. So this is part of the magic of ForexGridMaster. Now, expand this out, and you'll see the first trade here near the grid is 0.04 is the lot size. Now as trades go out further, the lot size gets bigger. Now you can pause the video at any time and see that. I won't do it here because I'm trying to keep things moving. But you can see here 0.1. So we went from 0.04 to 0.1, 0.11. Alright. Now we've had 28 runs. We're up 34%. So that shows you the power of compounding because each run is targeting 1%. So at the start of each run, the lot size is determined by lot size percent. Here you see it here at LSP 0.00011. That's a formula that determines the lot size at the beginning of each run based on equity cash, which are equal at the beginning of the run. And of course, if it reaches its target, in this case profit target, you can see it's $342, which would be 1%. We just had another close run. It's now 345. So each profit target gets larger, so each close run closes more profit. So this is how things are compounding. It's compounding from run to run. All right. So we're presently up 42%. If we look down here below at the time bar, we're at about July 25th, and so March 16th. If we go to August 16th, that would be March, April, May, June, July, August. So August 16th, we can take a look at the profit and see what it was for 6 months. Okay, we're July 19th, so we have a ways to go. All right. Okay, down here, bottom right of the chart, you see our margin level. It's very high. It's 4,000 at the moment. It went as low as 1,400. So the grid is being stretched, but it just got a close run, and the max equity drawdown from that is 17.48%. Now, equity is the net value of open trades combined with the cash balance. So a max drawdown of, now we're up to minus 31% max equity drawdown. So we can watch this here. Oh, we got a close run. So we have a new max equity drawdown of 31%, which is still good. It's still comfortable. And we're at 53% profit at the moment, August 5th. Feel like a hockey game announcer here. Another close run. Let me expand that so you can see the trading better. So price is going up, opening sells, back and forth, closing sells, opening sells where they were closed. So this is the beauty of a grid trader. It's taking advantage of every bit of price action there is. It doesn't matter where price goes, it's opening and closing trades. Okay, we're at August 14th, so at August 16th I'm going to take a look at equity here. August 15th. August 16th. Okay, we've gone 6 months. The balance is 40,468. Remember that. I'm going to go find my calculator on the website. That's yours truly, myself. There's the link to the compounding page. We'll go down to the calculator. We're going to solve for the rate, how much profit it makes per month. So 25,000 is what we're trading. We're going to trade exactly, we've traded 6 months. And the input total was 40,468, I think, and calculate. So that's 8.35% per month, which is an effective annual rate of 262% a year, but that includes the principal. So you take the principal out, so that leaves 162% a year so far. The important figure here is 8.35% per month compounding. It's closer to 8.36. All right, so that's good. Go back here, crunch things so we can see the comments better. We're presently on run 50. So we've completed 49 runs. There's the power of the compounding. It's 68%. 49 runs at 1% per run without compounding would be 49%, but we're at 69% now at run 51. All right. Okay, I'm going to go down the bottom here and explain a few things on the settings. On the bottom left top, Expert Advisor, that's where you choose the Expert Advisor that you're going to use for the backtest. In this case, it's my automated trading robot, version 5.1. Here on the right is the Expert Properties. That's where you access the settings. I can't do it while the trade's running. And the symbol, it's the Aussie New Zealand dollar we chose. The model is open prices, which is the fastest method, and fortunately with a grid trader like ForexGridMaster, you always use M1 data. Time frame doesn't matter in terms of the actual strategy and profit, but it does matter in Strategy Tester. You have to test M1 data to get the most data for results. Spread, we chose 25 because I see market's average spread at this time is 1.7 pips. Starting in January 2013, the average spread was 2.2. Their commission is 0.7 pips, so if you combine the two and we use a fixed spread of 2.5 pips, we're actually above what would really have happened during that time period on a real money account. So we're on the safe side. Over here, use date, you can see 2013 March 16th as a start from 2014 March 15th. Here we chose visual mode so we can see what we're seeing on the chart. There's a slider, you can slow it up or you can speed it up. Pause button. Yep. So you can pause it or you can keep it running. Skip to. Now, when you've seen enough and you're satisfied with how it's working and you don't necessarily want to watch every single trade all the way through, you can skip ahead by clicking the skip to button to the end, and it'll go probably 2-3 times faster because it doesn't have to display the visual. Having said that though, if you do click the skip to, you can hold down the end button on your keyboard and keep holding it down, and it'll follow the trading anyway visually on the chart. Or you can just let go and press the end at any time to catch up. We're not going to do that though. Well, so much for my 20-minute mark. We're only about halfway through and we've gone 13 minutes and 43 seconds. So it looks like we're going to have at least, let's see, a 30-minute video. Okay. Time for a sip of coffee. Good, organic, just us coffee. Barely traded. Love it. Now, ForexGridMaster was built for traders to create an unlimited number of strategies, and that's possible because there's 106 settings on the robot. Now, just about every strategy you're really only using 20 or 30 settings out of the 106, but you have a huge variety to choose from and a huge variety of ways to trade your grid. Also on board, although we're not using it in this strategy, is we have an automatic hedge grid. So we can run 2 grids at one time. We can run the main grid and we can also run the hedge grid. So if this range, for instance, that we're trading the main grid in here, and price goes a long ways and doesn't get a close run, then you might be, your max equity drawdown might be higher than you want it to be. So you can have a hedge trade already in place, ready to trigger automatically at a certain point out from grid center. The advantage there is to keep from getting margined out. The disadvantage there is you're going to stall trading if you're too close to grid center too many times, and you won't make as much profit. I've found through a lot of experience that I can do better skipping the hedge grid and just making sure I design the strategy so that the max equity drawdown stays under 50%. I'm most comfortable around 35–40%, and right at the moment we're running at 31%. You should strategy test as much as possible. The more strategy testing to do, the more you realize the exact risk of what you're doing and what it is that causes the risk, and it gives you a sense of your comfortable range of trading and the kind of profits you can get. It's work, but you know what? There's nobody out there that I know of who's making 7% a month and doing it safely over the long run. All right, we're at 90% profit, 31% max equity drawdown. I call that MED, by the way, MED, max equity drawdown. So the MED is 31%. A 1% profit now is $475, so that's the present target. All right. Now, one button I didn't talk about down here is the optimization button. Now, when you run the optimization feature, what you're doing is inside the robot settings, you can also set it up so that each setting can try a different range of values. In other words, I have take profit set to 15 pips here for each trade order. I could run the optimization feature and test take profit of 13, 15, 17, 19, and the optimization, when it runs, tests those different values, and in the end you have all the results on an optimization report. Actually, I'll show you what that report looks like while we have trading going on in the background here. Oh, I close. There we go. Compounding. All right, where are we here? FORO. Here we are. This is my new FORO program, which means FGM Optimization Report Online. And if you go down here, these are the optimization reports. Window's a little big. Maybe I'll go down a size. Let's see there. Hopefully you can see that. So here, this is report 63 as an example. 60, 58, etc. This shows you the date it's created on. The title is basically the strategy file name, which actually gives you all the major settings that are in each of the strategies and the ranges. Like here, for instance, 59 is close to the present onboard default Aussie New Zealand strategy. So let's look at this here. You can see buy sell counter trend 5, and there's a step of 0.1 of a pip. So what that means is at the beginning, the first trade, the first grid spacing is 5 pips between the first order and the second order. The next order would be 5 pips plus 1/10 of a pip. So after 10 orders are on the table, the grid spacing would actually be 6. Now that's a very effective setting. And here we have lot size. So there's no, we're not testing for optimization there. I've already figured that out, and in my mind that's the best we can do. So I'm satisfied with that. Now lot size percent, here we have 0.00012, and we're checking to 13. So we're testing two different values there, 0.00012 and 0.00013, to see which one will do better. Now the increase percent, that refers to each order as it goes out from grid center increasing by 12% or 13%. So we're actually testing those two different variations. The take profit, we're testing 14 pips, 15 pips, and 16 pips. We also have a step in the take profit, which I'm not using on this present test here. There's no step on the take profit. It's a straight 15. I was keeping it simple. Okay, while we're here, we're up 103%. We still have a med of 31%. And we're now at around November 15th. All right, so let's go back to this. We were looking at optimization report OR 59. Now we tested with no step on the take profit, so that's what S0 means, and we tested up to 0.1. Now I may have had a test in there. I'm not sure what the step is. A step is you start testing with this value, you step it by this much, and this is the max that you're going to test it at. I'll show you that a little bit further. Now here I'm using close run profit percent before trail stop. So 0.5%, 0.5, and up to 1%. So I think I tested 0.5, 0.725, and 1%. Now also I have a trail stop. See, it's getting more complicated here. There's all kinds of things you can do with this robot. So basically the run is targeting 0.5%, and it has a trail stop of 0.01%. So that enables more profit to be taken on the run. If it happens to be heading in a positive direction, the trail stop will follow it, and you may end up with a whole percent as an example. So that's also very effective. Now, these are notes about this optimization report. We ran 144 passes, so that's 144 variations of the strategy. I don't know how I did that. Okay, what I did is I clicked on it and we actually entered the optimization report. So here it is here, optimization report 59, 144 passes. All right, and again, here's the main settings of the strategy right across the title. Now, these are other things about this particular run. The client ID, that's me, James King, and the test model, open prices. It could be every tick. The brokers, IC Markets, currency pair, Aussie New Zealand, start balance 25,000, start date, the spread, the end date, and the leverage. All right. Now, there's not much activity in the forum. It'd be wonderful if more people would participate in the forum, but it seems people are too busy, or they've got a great winning strategy and they don't want anybody to know it. The reality of it is it's a bit like Linux, an open source operating system, only in this situation it's not open source code, it's open source strategy development, which is more powerful in this application. So here you can actually view the actual preset file and all the settings that's used in this optimization report. Now, as an example, let's find an easy one to understand. Okay, there we are. Main take profit pips is set to 14. Now the step It starts at 14, the step is 1 pip, and it goes to 16. So it'll test a 14 pip take profit, 15 pip take profit, and a 16 pip take profit. So you can actually download that and use it yourself, and that's the beauty. People can go on this program, FORO, and share their strategy testing with each other, and it's a good way to develop strategies and get continuously more and more profitable and safe strategies. All right, where was I? Okay. So here's where you download that set file. Now here's the optimization report file itself that you upload, and you can view that. So there's what an optimization report looks like. Now the disadvantage of the optimization report is you cannot sort the columns. Okay, you're stuck with what you chose, what sort you chose when you saved the report. In this case, I saved the report with the lowest max equity drawdown at the top. So the lowest is 32.45%. And if you scroll to the bottom, you'll see the highest is an 81% max equity drawdown, which is too much, of course. So you wouldn't choose any of those strategies to trade, would you? But you might trade some of these strategies in here because they may have a higher profit than the lower med. All right, let's go back here. And these are each of the variations of the strategy that are being tested. First of all, let me demonstrate the columns. Okay, this is profit per month. I don't like the way it does that. If it's full screen, it doesn't do that. But I can't do full screen because we'll get outside of the video window. So here I have the highest profit per month here, 12% per month, which is very high. Max equity draws 45%. That may be worth it to you. The next one is 11.97 at 38%. Now, these are testing a specific period. You cannot guarantee that you're going to get the same results in the future because the future market is different from the past market. But if you've done forward testing in the past market enough, you can understand how well it should do in the future if the price activity ranges in the future and volatility doesn't differ much from the past. And usually it doesn't. That is if you're testing back 3 to 5 years, which I do. Actually, I test back further than that, but with the Aussie New Zealand dollar, you go back beyond 3 years and you just make 20, 30, even 100 times more profit than you can now because of the way price action was then. But no longer the case. So the best period to choose is a 1-year period, and that gives you the most accurate data for going forward. All right, so here we are here. We have an ID for that particular pass, and we have a number for the pass. The number is within the optimization report. The ID is among all of the optimization reports. This shows you the number of trades during the pass. This gives you the profit factor, the max drawdown percent, and the profit per month. Now these are the changes that you made from the base file that you were testing. Now you can actually see these are the only settings that were changed. So in this case it was 0.00013 for lot size percent, take profit of 16 pips, lot size increase percent of 13, and that gave you those results. And so you've got 6 different things that are changing. Now if you go down further, you'll see there's lot size percent of 12, take profit of 15, lot size increase of 12. So each one of these passes is different from the 143 other passes. Now each of those, you can look at the full strategy file, or you can actually download the file and load it in the robot and trade it yourself. And you can test it yourself and see for yourself what it'll do. And that's what I'm about, teaching a fisherman how to fish, not giving him the fish. All right, so that's that. Back to here. You can sort these columns, all of them. So you can sort by max equity drawdown, if that interests you the most. Actually, you should sort every one of them and compare. When you're doing a lot of sorting and comparing, you learn a lot, believe me. So here we have the lowest max equity drawdown, and it's a profit percent of 9.39% a month, which is huge because that's compounding. As an example, 7% compounding monthly for 3 years is 1,042%. Now that 9.39%, let's see what that compounds to. Okay, where's my calculator? I think I lost my calculator. I did. Let's go back to the calculator. So now we're going to solve for total because we know the rate, and we're starting with 25,000. And we're going to input for 3 years, so that's 36 months. And the input rate is 9.39% per month. So if we calculate that, we have an effective annual rate of 293% minus 100, so it's 193% per year. But that compounding over 3 years will actually add up to 632,607%. Now, I'm not going to pull up the calculator there. I'm going to use the calculator right in front of me. And what I'm going to do is I'm going to go 632,607 minus the principal of 25 on 2,000. That equals that amount, and we'll put that in memory, and then, we'll divide that by 25 on 2,000 equals, so that's 2,430%. So that's more than twice a 7% per month compounding, which adds up to 1,042%. 9.39% adds up to 2,430% over 3 years. That's incredible. All right, leave you with that. Let's go back to the trading. See where we're at. We're close to the end. We're at the 32-minute mark. I always think I'm going to get this done faster, but it's not happening. All right, so where are we at here? Okay, we've actually reached a max equity drawdown of 40%, which is still okay, but it's not as good as the 30%, which I got the last time I ran this test. So this particular test started March 16th. I think the last one I started the 1st of 2013. So that shifts where the trades open and stuff compared to price. So this shows you very clearly how important it is to do walk forward tests. What a walk forward test is you'll start a test on, let's say, the 1st of January, and then after that test you'll start maybe on the 5th, and then maybe on the 10th, and then maybe on the 15th. After you run 3 to 6 of those, and if you're still getting a low max equity drawdown, then you know you've got something that's probably going to be really good for the long run. So I'm comfortable with 40%. Most really big money aren't comfortable with a 40% max equity drawdown. And once I catch up with my customers, version 5 came out of beta last September. I'm still dealing with customers and helping them adjust to all the new settings. And also I'm helping customers on their real money accounts. So I've been very busy. I actually haven't had a lot of time for strategy testing and strategy development. And that's one of the big reasons why I'm showing you this, so that I can get more of you folks doing this and get something happening on the forum so that we can develop safer strategies. This strategy can be made more safe by using the onboard automatic hedge grid system. And I think you would not lose too much profit. You could probably get one that will keep the max equity drawdown below 35%, and maybe you're going to end up with something like 8% per month, which is excellent. Other than that, there's another system you can use, which I've actually done and seen really good results with, but I've only did one run. And what I did was I put a stop loss on each individual order. This test you see running here now, there's no stop loss on each individual order. But if you put a stop loss on the order of, I don't know, anywhere from 150 pips to 200 pips, when the, oh, that was a big gap. It didn't hurt us because we're only at -2%, but it gives you an example of the gaps that can show up. You might want to pause the video and go back to that gap just to examine it. Another close run. So we're at 141% profit. We're in March. Okay. So by putting a stop loss of 150 pips to 200 pips or whatever, I mean, you have to test, trial and error. It doesn't take very long. This whole test, the reason why this is taking so long is I'm on my laptop. I don't normally do my tests on the laptop. I have a quad core over there that's very fast and probably does this test 3 times as fast. Yeah, so I wasn't counting on that one. I wasn't thinking about it. So if you put stop loss on it, that actually lessens the risk, allows the grid to stretch further while it's taking profits on its individual orders until it reaches the net value of your close run profit percent. And it makes it a little safer, but it might stretch out your close runs. You won't get as many close runs, and so you won't make quite as much profit. But if you can figure out the most efficient hedge grid so it doesn't interfere with the main grid too much, then you're going to make things better. It's work. You have to try a lot of different settings. That's where the optimization feature in Strategy Tester comes in. A lot of people are intimidated by Strategy Tester and the optimization thing, but the reality of it is, you know, you can put a strategy, once you're used to the settings a bit, you can put a strategy together in 5 minutes, start it going, and go do something else, and come back in half hour, an hour, and see what the results was. In beginning the first 2 or 3 strategy tests, you'll probably want to watch it just to see how the strategy actually works, because you'll learn an incredible amount from that as well. And there's other things you can do too. You can check out the... Oh, we're at the end. Okay, let's see what we have here. Max equity drawdown, 40.8%. We're up 148%, which may not be perfectly accurate because of rounding off. What is perfectly accurate is the equity. So we're going to work with that and figure out what we got here. So this time we're going to solve for rate, and we got to fill the fields in again. 25,000. Months, we went exactly 1 year, so 12 months. And the input total is going to be 62,462. 62,462. Okay, so calculate So we've got 7.92% compounding monthly, which would equal 150% a year. So that's pretty reasonable. The 40% is a little higher than I normally see when I'm testing these, but that can happen, and anything can happen in future data too. But in general, the Aussie New Zealand dollar, the volatility, in other words, the ranges it's going to up and down, is less in the last several months. And I think it's because of the difficulty the world is in at the moment financially, and Aussie and the New Zealand are neighbors, and they're not going to upset the apple cart too much. And the currency market is totally manipulated by the banks, make no mistake about that. And that's partially why I stopped using indicators and things, because everything is now much more random than it's ever been. When the banks want to move price in a certain direction, they just jump in and do it. Simple as that. So that's the advantage of ForexGridMaster, is it trades price both ways, and I don't care which way it goes or how far it goes. It's profiting from the up and down within the trends and within the ranging. Okay, I'll stop there. We're at the 41-minute mark. Again, I've gone much further than I thought I would. All right, have a good day.